I hope everyone is enjoying the IPL season. I mean, the IPO season. Well, you might be wondering why am I saying IPO season? Because there are so many IPOs which got listed in the last 1 or 2 months. So we must understand that is Equitas just going ahead with the flow, or is there any reason why they are coming up with its IPO? To know about this, check out the full video. Hi guys, Rachana Ranade here and I welcome you all to another IPO lecture on Equitas Small Finance Bank. As I discussed in the first part of the video, let's first understand the reason as to why the bank is getting listed on the stock exchange. As per the SFB licensing guidelines, SFB Small Finance Bank licensing guidelines, any small finance bank is required to get its shares listed on the stock exchange within 3 years from the commencement of its operations. The operations of this bank got commenced on 2016 and ideally they had to list their shares within 2019, but they were not able to list it till 2019. Why, whatever additional details we are going to do in the coming parts of the video, but finally they are coming up with an IPO in 2020. So before we go on with the details of this company, first of all, let's understand what is the meaning of a small finance bank. Okay, it's a bank which primarily serves to the unserved or the underserved category of sectors or category of people. What do we mean by unserved? These are areas where maybe banking is not that much active. Either it is unserved or underserved. Okay, these are the target areas for the small finance bank. Second thing which is important, that they are required to extend at least 75% of their adjusted net banking credit to eligible sectors which are under the priority lending sector. Okay, just as an example, priority sector lending can be done to a priority sector like agriculture. Okay, and the third thing to be classified as a small finance bank is that at least 50% of their loan portfolio should be of loans and advances which are below 25 lakhs. In simple words, you're giving loans to small people who are otherwise deprived from getting loans from bigger banks. So what should be your loan size, ticket size? It should be less than 25 lakhs, and such loans should be majority of your loans, more than 50% of your loan book. So let's start with a quick industry analysis. This is a small table for you which shows the financial inclusion across geographies. So if I'm talking about South India, in South India the financial inclusion is the highest at 79.8%, and in North India it is at 46.5%, which is the lowest. Just for your knowledge, what is financial inclusion? It is a way to measure how much exposure you have towards the core banking sector. So if I'm talking about the example of South India, out of 100 people, 79.8% of the people have an exposure towards the core banking facilities. Okay, so I think all the South Indian peoples will be feeling very proud at this moment that literacy is also highest there and financial literacy is also highest. I can say romba nalla irukke if I'm not mistaken, right? Going ahead, if I'm talking about growth of AUM in small finance banks, from 2016 to 2019, the CAGR was at 26%. But if I'm talking about 2019 to 2022, the growth of AUM is almost 25% CAGR. So there's a big opportunity available here as well. If I'm talking about the growth in deposits grew at 109% from 18 to 19. And from 19 to 22, deposits are expected to grow at 60 to 65%. But obviously understand, as and how the small finance banks grow and get bigger, they might face some stiff competition from public and private sector banks. Let's quickly understand the history of this bank. Originally in 1993, it was incorporated as VAP Finance Private Limited on June 21st at Madras, now Chennai, Tamil Nadu. Then okay, wait. Instead of telling you so many things, in short, what happened, I'll tell you. There were a series of changes wherein the company status changed from private to public, public to private. They changed their name in between as well. And finally in 2016, okay, so from a journey from 1993 to 2016, To cut the long story short, as they changed their status in between, name in between, finally in 2016 what happened was, company's promoter, who was Equitas Holding Limited, received an approval from RBI to establish a small finance bank. Okay, accordingly Equitas Finance Limited changed to Equitas Small Finance Bank. So basically holding company got an approval that its subsidiary would be allowed to get a license as a small finance bank. In addition to that, what happened was that Equitas Microfinance Bank Limited and Equitas Housing Finance Limited were also merged into Equitas Small Finance Bank. That was it about a short history of this company. If I consider the number of banking outlets as a parameter, then Equity Small Finance Bank is the largest small finance bank. But if I am comparing it with a parameter of total assets under management, then it is the second largest small finance bank in India. If I were to dig down a little bit more deep into their core business, you can see that the types of, it's too small or what? Okay, wait, let me move outside the screen so that you will be able to see this table very nicely. Okay, so let's understand the various types of loans given by Equitas Small Finance Bank. They provide small business loans, microfinance loans, vehicle loans, MSE loans, corporate loans and other loans. Okay, but just by looking at the type of loan, we might not understand that exactly to whom this loan is given. So that's why I'm reading out who are the eligible customers. So here you can see that small business loans are loans which are given to self-employed individuals who are generally like push cart owners, agri business, dairy business owners. So basically small self-employed individuals, right? Microfinance loan are given to whom? These are given to loans for women who are generally take a loan, they avail a loan in a group of 7 to 30 members. Vehicle finance, the name is very familiar, I agree, but how is it different from a normal vehicle loan is that generally vehicle finance given by a small finance bank will be given to a person who is like a first time formal financial channel borrower without any sufficient credit history. MSC loan, these are like working capital loans, this is normal. Even corporate loans are normal. Others like gold, loan against gold, unsecured loans, all these are normal, nothing special to be taught here, right? The next point I would like to tell you that now that you have understood what are the types of loan, to whom the loan is given, now let us understand what is the average amount of loan, that is nothing but the ticket size given to a specific person who avails the loan, right? So I'll give you an example. Here you can see in the microfinance category, you can see 5-35. Now what does this mean? On an average, if a microfinance loan is given, then the amount of loan, that is the ticket size, will be somewhere between 5,000 rupees to 35,000 rupees. Okay. So on and so forth, right? And if I am talking about the percentage of gross total advances, here you can see that in small business loans, highest loans, so out of the total loans, out of the total advances that they have given to various people, highest percentage of loans is given to small finance bank, which is 41.6%. Okay, wait. Small finance bank was given to whom? All these self-employed people, push cart people, dairy business, agri business, all small self-employed individuals. Can you see a threat coming here? Okay, what is the threat? Threat is that because of corona, there is a chance that their business might have gotten hampered, and with this, there is a chance that the NPAs of this bank might increase. I'm not saying 100% this will happen, but surely there is a probability that NPAs might rise because of the corona thing. Now let's move on to understand how the bank has its presence in India. Now if you see that in South, the bank has its highest number of banking outlets, and if I am talking about business correspondents also, South is highest. You might be wondering, is she repeating something in the video? No. Earlier whatever I talked about was the industry analysis, overall financial inclusion, overall financial exposure to people. Here I am talking only about this bank. Okay, this bank has highest branches, banking outlets, whatever, business correspondents in South, and in East if you see here, it is 0. So there is a clear opportunity for the bank to expand their operations in the East and thereby increasing their top and bottom line numbers. With that, let's move on with the financial statements analysis. Okay, please understand, these financial statements are huge. So what I'm going to do is I'm going to just point out what are the important points in the SFB's financial statements, right? The very first one is how much did their deposits grow, how much did their advances grow. Okay, advances grew at 33.56% CAGR and deposits grew at 38.75% CAGR. Okay, so this is a 2-year CAGR I'm talking about. So deposits, advances both have grown at a decent level, right? If I'm talking about interest earned and interest expended, the figures for 2 years are 31.42% CAGR and 30.92% CAGR. So again, see, why did I talk about these parameters? Because for any bank, may it be a normal bank or a small finance bank, two important parameters in the balance sheet are how many loans they have given, how much loans they have given, how much deposits they have received. Okay, we talked about the CAGR of these 2 points, and then we talked about how much is interest expended and how much is interest earned. In all these 4 parameters, we can see a decent enough growth in the 2 years CAGR. Now moving on with one more point, which is a summary of their deposits. Here you can see that their saving deposits are comparatively less as compared to the term deposits. Now whenever you are analyzing any bank, very important ratio is a CASA ratio. CASA is current account saving account. So if CASA, current account saving account balances are more, it is always beneficial for the bank because their cost of borrowing money is very less here. Okay, and unfortunately for this bank, if you see, the term deposits in all the 3 years 2018, 19, 20 is way too higher as compared to its saving bank accounts, and that's why their cost of borrowings is going to be a little bit higher. Moving ahead with last 1 or 2 points of the financial analysis, now we are going to try to understand how much is the net NPAs as a percentage of the net advances. Always remember as a thumb rule, lower this ratio, it's better. Okay, in simple words, if I have given a 100 rupees loan and if my net NPAs to the advance given is 2%, what does this mean? Out of 100 rupees given, I received back only 98. Okay, now had this ratio been 10%, then out of my 100, I received back only 90 rupees. So lower the better is going to be a thumb rule for net NPAs to net advances. What is the scenario for this bank? It was 1.46% in 2018, 1.44% in 2019, so good, but in 2020 it was 1.66%, a shade higher than 19. Hopefully this does not grow very much in the year 2021. Okay, one last point, capital adequacy ratio. Here if you see, the tier 1 capital of the bank is very good. It is at 21% as on June 30th, 2020, which on June 30th, 2019 was 20.65%. Okay, just for you to understand, tier 1 capital is like the hardcore capital of any bank. Okay, higher it is, better it is. As per the norms, minimum tier 1 capital has to be 15%. This is way too higher than the expected norms, and in fact the IPO proceeds which the bank is going to get, a part of that is also going to go for the tier 1. Let's do a quick peer comparison analysis. In the red herring prospectus, there were many more peers, but I thought of taking only few comparable peers. We have AU Small Finance Bank, Ujjivan Small Finance Bank and Credit Access Grameen. If you see amongst all these, if I am comparing it with Equitas, price to book value ratio, which is very important for any bank or financial institution, is the lowest for Equitas. PE is generally not so much important for banks and BFCs, but just in case, even if you check that, that is also lowest. So looking at this, you might say, wow, amazing, but wait, why it is having a low PB? That is important. Let's understand this. Return on net worth, it is the lowest for Equitas as compared to its peers. If I am talking about NAV, net asset value, it is almost the lowest, second lowest as compared to its peers. Even if I am talking about EPS, that is also second lowest as compared to the peers. So if these points are not very healthy, then why and how can it quote a higher PB or a higher PE? Let's come to the key details of IPO. IPO date is from 20th October to 22nd of October. It's expected to get listed on the stock exchange on 2nd of November. It's going to get listed on BSE, NSE. Both market lot is 450 with a price band of 32 to 33 rupees. Okay, so at the higher end of the price band, you will have to bid for 14,850 rupees for one lot, and the promoter holding is around 95%. There are some people who are very hungry of knowledge. They want to learn more and more, and they feel that this analysis also was good, but we wanted to learn more. So for all these category of people, we also have made a separate blog which mentions the SWOT, strength, weakness, opportunity, threats of this company. We are also going to give small points for litigations for this company as well. But if after doing all these things, if you want to know the final answer, whether I'm going to apply for it or not, for that you'll have to check out my Insta live on 22nd of October at 12 noon. I hope you have enjoyed this short video. I can say this is a short video as compared to my standards. Till then, take care. Jai Hind and bye-bye.